Standard Accountancy, Chapter 1, Accounts from Incomplete Records. Okay, what is meant by incomplete records? According to Indian Companies Act 2013, Section 128, Subsection 1, all the organization must maintain their accounts under double entry system. Okay, what are the companies are not strictly follow under double entry system? That is called incomplete records. What is meant by double entry system? Listen, double entry system means each and every transactions at least have two accounting system or twofold aspects. What are they? Debit aspect and credit aspects. Debit is always corresponding equal to the credit. That is called twofold aspect. Say for example, each and every, what I said, each and every transaction at least has two accounting system. Say for example, one transaction sold goods for cash 1000 rupees. Okay, what are the accounts are affected here? Two accounts are affected here, cash account and the sales account. Listen, whenever you made sales, if you run a business, say for example, if you run a business, you generate sales through cash. Okay, whenever you made sales, the cash comes into your business, right? So whenever cash comes into your business through sales, your cash account increases. Okay, whenever cash account increases, asset account also increases. Why? Because cash account belongs to asset items. Okay, so whenever you generate sales, your cash account increases. Cash comes into your business, so cash account increases. Whenever cash account increases, asset account also increases. Whenever asset account increases, asset item is to be debited. What is the asset item is here? Cash account is the asset item. Okay, so cash account is to be debited. So cash accounted are 1000 rupees. Okay, why cash comes into a business? Because of cash sales. Okay, so the another aspect is sales. Okay, whenever you made sales, your revenue increases, right? So revenue belongs to, so sales belongs to which account? Sales belongs to revenue item. Whenever you made sales, your revenue account increases. Whenever revenue account increases, it is to be credited. So which is account is to be credited? Sales account is to be credited because of the sales, revenue account increased. Okay, so whenever revenue account increases, sales account is to be credited. So sales account 10,000 rupees entered. So what are the two accounts are affected in this transaction? So sold goods for cash 1000 rupees, cash account debtor 1000 rupees to sales account 1000 rupees. Okay, so debit account is correspondingly equal to the credit account. This is the double entry system, twofold aspect. So according to Indian Companies Act 2013, Section 128, Subsection 1, what are the companies are not strictly follow the double entry system? It is to be incomplete records. So instead of double entry system, which account they followed? Instead of double entry system, they follow the single entry system. What is meant by single entry system? Single entry system means only one side only they entered. Say for example, one transaction, say purchased goods for cash 1000 rupees. Okay, so here some organizations only recorded single entry. Instead of double entry system, they entered single entry system, which means one side entry only they entered. Okay, say for example, purchased goods for cash 1000 rupees. What are the two accounts are affected? At least two accounts affected, debit account and credit account. So here purchases account and the cash accounts are affected here. Purchased goods for cash means purchases account and cash account affected, right? So purchases means what? Expenses. Purchases account belongs to which account? Purchases accounts belongs to expenses account, right? So whenever you made purchases, your expenses account increased. Whenever expenses account increases, it is to be debited. So purchases account is to be debited 1000 rupees. Okay, then what account is to be affected? Cash account. Whenever you made purchases, expenses increases, so your cash account goes out. Whenever you made expenses, your cash account goes out from your company. Okay, from your business. So your cash account decreased. Cash account belongs to which account, which item? Cash account belongs to asset item, right? So your asset account decreased because of you made expenses through purchases, right? So whenever your asset account decreases, your cash item, your asset item is to be credited. 100 2 கைப்பிடி மட்டும். Your asset account is to be decreased. Whenever your asset account decreases, your cash item is to be credited. So cash account 1000 rupees credited. So what are the twofold accounts in each and every transactions? According to that, purchases accounted are 1000 rupees to cash account. In some organization, they entered or not recorded their accounts, they not maintain their accounts under double entry system. They follow the single entry system because they only entered one sided accounts only. That is called single entry system. So cash paid through purchases, right? Cash purchases means pay the expenses only they recorded into their cash account, and the expenses account they didn't recorded in the purchases account. Cash account only they maintained and the expenses account not maintained into the purchases account. That is called one-sided item, that is called single entry system. Even though some transaction they didn't recorded at all. Say for example, depreciation 10% on fixed asset 10,000 rupees. What is meant by fixed asset? Say for example, some fixed items or fixed asset items are furniture, plant and machinery, land and building, furniture, debtors. These some items are called as fixed assets. So depreciation 10% on fixed asset 10,000 rupees. Some organization not recorded at all. This transaction completely omitted. So this is called as the incomplete record. They not maintain their accounts properly, which means not maintained in double entry system. So what are the organizations or companies? They maintain their accounts under double entry system according to Indian Companies Act 2018. This is called the right one. So what are the organizations not maintain the double entry system, which is called incomplete record? They partially maintained, not maintained fully, not the full set of accounts they are not maintained. They maintained partial account, that is called the incomplete records. Okay. So what are the accounts are maintained fully in incomplete records, which means there is only 2 accounts only they maintained according to their convenient, according to their necessary. They only maintain the ஒரு கை போடு பத்தாது, இன்னும் 2 கை போடு. So what are the accounts they only maintain? Cash account and personal account. Personal account means customers account and creditors accounts only they maintained, and other accounts they maintained based on their necessities. Okay. So what are the accounts are partially recorded in the incomplete accounts? Real account and nominal account they only recorded partially. Okay. So what are the possible reasons to keep the incomplete records? What are the possible reasons why they not maintain the double entry system? There are some possible reasons to keep the incomplete records. Maybe the lack of accounting knowledge, insufficient accounting knowledge, loss due to theft, due to fire, during the natural calamities, some old accounting records or loss due to damages, theft. Okay. So some old records or few records or all the old records or loss for damages, theft, fire or natural calamities. When they moving into the new accounting system, some old records are damaged for the above reasons. So there is no way they go to following the incomplete records. Okay. Then what are the accounts are maintained in incomplete records? There is only two accounts. What are they? cash accounts and the personal accounts. Okay, in personal accounts they only maintain the customers account and the creditors account. Okay, and what are the accounts are not maintained? Already I mentioned real account and non-real account are not maintained in the incomplete records. Which type of organizations or follow the incomplete records? This is the very important question. Which type of organization follow to maintain or to keep the incomplete records? Small businesses. Small businesses means small businesses means what? Sole traders, say for example, sole traders and partnership business, often they maintain the incomplete records. Okay, even though many small shops only they maintain the cash account and the personal accounts and the other accounts according to their facilities, their necessities, they maintain based on their convenience. Okay, without maintaining the available accounts, or they not maintaining the sales account, purchases account, assets and liabilities account. Okay, in case in large organizations also maintaining their accounting records in incomplete because of the loss of theft or due to the fire, during the natural calamities, floods, etc. They can't be able to maintain all the old records when they transfer into the new accounting system. Okay, then they not some employees in the organization may be purposely or voluntarily making confusing in the accounting system. Okay, in other causes or some organizations may not proper shield to maintain to covering the old accounting records. Okay, then in some other organization or consultancies, consultancy businesses, they only following tracks of accounting system, only income and expenditure account, cash flow and personal accounts only. So, but not maintaining the full set of the financial accounting system. And one more company is upcoming business, which means startup businesses. The young companies may not having the sufficient they not having the sufficient financial resources or not having the sufficient staff. They are not implementing the full set of the accounting system. So for that they only maintaining the cash account and the personal account. Okay, so that is these companies or these organizations are following the incomplete records. Okay, then which values are affected to maintain the incomplete records? The incomplete records having the inaccurate accounting system. Okay, they are not following the proper accounting system. There is no fair and true assets and liabilities in that organizations. Okay, it is difficult to calculate or it is difficult to find out the profit and loss for the specific accounting period, and there is a difficult to calculate the financial statement of the specific accounting period. Okay, so what are the confusions occurred because of keeping the incomplete records? There are lots of confusion because of keeping the or maintaining the incomplete records. Say for example, mixed up with the personal accounts into the business accounts. Say for which means personal accounting transactions of the owners are mixed up with the business accounting, because business transactions accounting. Say for example, purchased goods for own use of the owner is mixed up along with the business purchases. This is the major confusion occurs because of the incomplete records. Okay, so how to find out the profit and loss for the specific accounting period with the incomplete records? It is difficult to find out the profit or loss for the specific accounting period with the incomplete records. How can we calculate? With the help of the statement of affairs, we can calculate. with the available data, with the available information, with the memory power, we can prepare the profit and loss for the organization for the specific accounting period. Okay. So what is the other name of the statement of affairs? The other name of the statement of affairs is net worth calculation and comparison of the capital method. Okay, net worth method and the comparison of the capital accounting method. Okay, this is the other name of the statement of affairs. Okay, how is to prepare the statement of affairs to find out the capital profit and loss account? It is very simple. We have the format to find out the profit and loss for the specific accounting period with the help of the statement of affairs. The format is, the heading is statement of a profit and loss for the specific accounting period they given at the question. Okay, so the format is particulars and rupees. We need 4 information only to prepare the profit and loss account. What are they? The comparison between the capital end of the accounting period and opening accounting period, capital difference between the capital, and some more information, that is a drawing during the accounting period, additional capital introduced during the period. Okay, with this 4 information we can easily calculate or easily find out the company's profit or loss for the specific accounting period. Okay, so we have to add closing capital with the drawing together. We will get the value. With that value, we have to deduct the additional capital introduced during the year. Okay, after subtracted, we get the value. That value is called adjusted closing capital. With adjusted closing capital value, we have to subtract the opening capital. After subtracted, you get the value, that is called profit or loss for the accounting year. Listen here carefully. So we need only 4 informations. What are they? To find out the profit and loss under the statement of affairs method. Okay, what are they? Closing capital, opening capital, additional capital, and drawings. Okay, so closing capital and drawings together added, we get the value. With that value, we have to subtract additional capital during the year. After subtracted, we get the value. That value is called adjusted closing capital. With the adjusted closing capital, we have to subtract the opening capital. We will get the value, that is called profit or loss for the year. How can you find out that value is called profit? Listen. If the adjusted closing capital's value is more than that of the opening capital, it is denoted as profit. How can you find out loss? Listen. If the adjusted closing capital's value is less than that of the opening capital, it is denoted as loss of the year. Okay. So on the basis of the statement of affairs, we are going to prepare the profit and loss account. Exercise sum number 1. Take page number 31. Let's read the question. Okay. The first question is, from the following particulars ascertain profit or loss. Capital at the beginning of the year 1st April 2018, 5 lakh rupees. Capital at the end of the year 31st March 2019, 8 lakh 50,000 rupees. Additional capital introduced during the year 1 lakh 20,000 rupees, and drawing during the year 70,000 rupees. With this 4 information, we are going to prepare the profit and loss, find out the profit and loss account. So as per the format, first we are going to write the heading. What is the heading? Statement of profit and loss for the year end. They have given, always we are going to write end of the accounting period. How can you find out the end of the accounting period? There are 2 accounting periods given here. 1st April 2018 and 31st March 2019. Among this year, which year is the end of the accounting year? 31st March 2019 is the end of the accounting year. So always you are going to write end of the accounting year in the heading. So 31st March 2019, entered. Okay, so particular rupees, this is the format. Okay, first always you are going to start with closing capital. Closing capital date also given here. Closing capital at the end of the year, how much rupees? 8,50,000 rupees entered. Okay, with the closing capital we are going to add drawings. So drawings amount is 70,000 rupees. So added together 8,50,000 rupees with 70,000, you will get 9,20,000 rupees. Okay, with that value you are going to subtract the additional capital introduced during the year. So additional capital value is how much? 1,20,000 rupees. So you are going to subtract 1,20,000 rupees from 9,20,000, you will get 8 lakh rupees. Okay, this 8 lakh rupees is called as adjusted closing capital. Got it? Okay, with that adjusted closing capital we are going to subtract opening capital. Opening capital 1st April 2018 value is 5 lakh rupees. Okay, so 5 lakh rupees subtracted from 8 lakh rupees, you will get 3 lakh rupees. This is called profit for the year. 3 lakh rupees. How can you say this is 3 lakh rupees is the profit? Listen, the adjusted closing capital, if the adjusted closing capital value is more than that of the opening capital value, it is denoted as profit. Here adjusted closing capital value is 8 lakh rupees. Then more than opening capital 5 lakh rupees. Okay, so after subtracted you will get 3 lakh rupees. So you get the profit for the year. Adjusted closing capital value is higher than the opening capital value. Okay, so you get profit for the year. Okay, come to the second exercise, sum number 2. Let's read the question. Capital as on January 1st January 2018 2,20,000 rupees, and capital as on 31st December 2018 is 1,80,000 rupees. Additional capital introduced during the year 40,000 rupees, and drawings made during the year 50,000 rupees. So according to this information we are going to prepare the profit and loss for the year. Okay, given here. First you are going to enter the heading. What is heading? Statement of the profit or loss for the year ending. Which year you are going to enter here? There are two year is given here. Okay, so opening capital year, end capital at the end of the year. So you are going to always enter end of the capital account. Okay, capital account at the end. So listen, 1st January 2018, 31st December 2018. Which one is the closing accounting period? 31st December 2018 is the end of the accounting period. So you are going to write 31st December 2018. Then particulars rupees entered. Always you are going to start in the, to find out the profit and loss account, you are always going to start closing capital account. Okay, so which is closing capital account? Among these, 31st December 2018 is the closing capital. 1st January 2018 is the opening capital. So closing capital 31st December 2018 1,80,000 rupees entered. With the closing capital we are going to add drawings. So add drawing during the year 50,000 to added together you will get 2,30,000 rupees. With that value you are going to subtract additional capital introduced during the year 40,000 rupees. After subtracted you will get 1,90,000 rupees. That 1,90,000 rupees is called as what? Adjusted closing capital. Okay, with the adjusted closing capital we are going to what? We are going to subtract the opening capital. So opening capital 1st January 2018 capital as on 1st January 2018 is called as opening capital value is how much? 2,20,000 rupees. After subtracted you got 30,000 rupees. Okay, so what we have to do? We are going to find out whether that 30,000 rupees is a profit or loss. How can you find out? Listen, if the adjusted closing capital value is less than that of the opening capital, then it is called loss. According to that, Here, adjusted closing capital value is less than that of the opening capital value. Adjusted closing capital 1,90,000 rupees is less than that of the opening capital 2,20,000 rupees. So you got lost 30,000 rupees. The difference between the adjusted closing capital, opening capital, you will get lost 30,000 rupees. So you are going to write loss for the year 30,000 rupees. Right? Come to the third exercise, sum number 3. From the following details, calculate the missing figure. Closing capital as on 31st/3/2018 80,000 rupees. Additional capital introduced during the year 30,000 rupees. Drawing during the year 15,000. Opening capital as on 1/4/2017 is missing. What is the missing figure? Opening capital. Instead of that, they have given loss for the year ending 31st/3/2018 25,000 rupees. Okay, so from this information, what we are going to do, we are going to find out the missing figure, opening capital. So what we have to do, as per the statement of affairs of format, we are going to find out the missing figure. Okay, we did not find out the profit and loss account because they have given here loss for the year 25,000 rupees loss. Okay, they have given. So instead of loss, what we are going to find out, missing figure, that is opening capital. Okay, so as per the statement of affairs format, we are going to enter here. First, we are going to enter the heading. What is the heading? Statement of profit and loss for the year ending. Which account you are going to enter? End of the accounting period. What is the end of the accounting period? 31st/3/2018. There are 3 accounting period is given here. You always enter closing capital. This is the clue for you. Okay, always enter the closing capital accounting period. Closing capital is 31st/3/2018. So you are going to write 3 means 31st/3 means what? March. 31st March 2018 enter. Okay, the format is particulars and rupees. How can you start? Always started with closing capital. Okay, so closing capital as on 31st/2018 is 80,000 rupees entered. After that, as per the format, what we are going to do, we are going to add drawings with the closing capital. So add drawings 15,000 with the closing capital 80,000, you will get together 95,000. Okay, you get the value 95,000. With that value, what we have to do? We are going to subtract the additional capital introduced during the year 30,000 rupees. Okay, after subtracted 30,000 rupees with the 95,000, you will get 65,000 rupees. What we have to do next? That 65,000 we are going to enter adjusted closing capital. Okay, what is that 65,000? This is called as adjusted closing capital. Okay, after find out the adjusted closing capital, what we are going to do? We are going to write as per the format minus opening capital. Okay, so we don't know the opening capital value because we are going to find out the opening capital here. Okay, so but as per the format, we are going to enter opening capital, leave the space here. Amount, we don't know amount. Okay, okay, then loss for the year they have given in the question. Loss for the year in 31st/3/2018 25,000 rupees. So according to the format, we are going to enter loss for the year in 31st/2018 25,000 rupees. Okay, listen here carefully. What we have to do to find out the opening capital. Okay, so for that we are going to add adjusted closing capital 65,000 rupees plus 25,000, you will get 90,000. You are going to add the adjusted capital 65,000 plus loss for the year ending 25,000, you get 90,000 rupees. This is the balancing figure. Okay, what is this? This is the balancing figure. We need to find out the opening capital. So opening capital value is 90,000 rupees. We can cross check it. How can you cross check it whether it is right or wrong? Listen, the adjusted closing capital value is 65,000. Okay, then as per the format, we are going to subtract the opening capital with the adjusted capital. 65 minus 90, you get the 25,000, right? 90 minus 65, you got 25,000. Whether it is a loss or profit for the year. Listen, if the adjusted closing capital is less than that of the opening capital, then it is called as loss. So adjusted closing capital is less 65,000. Then that of the opening capital value 90,000. After subtracted the difference between the adjusted closing capital and opening capital, the difference between that you get the 25,000. This is called as, denoted as loss for the year. Okay. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.